Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look now on the gold market. So here is, we could tell the same as in the euro currency market, to just keep going over trading plan that we discussed on weekend. If you remember, on weekend we talked about upward continuation, and I said that despite that there are some phantom chances exist that gold could show downside action, but our major view is that it should keep going higher. It's very simple logic with it, as that, actually, if upward rally, the insurance rally before elections has started, why it should stop before the elections? So yes, market could take some pauses, but as market will come closer to the election day, as more demand for the gold will be. And from that standpoint of view, you could see what's going on here. And even on Friday, on intraday charts, we said that performance in general that we see on intraday charts is not typical for the bearish market. So it clearly shows the breaking of some bearish foundation on the intraday chart. And that makes me think that euro currency, the gold market should keep going higher. So, and actually this is what we see right now. Besides, if you take a look on the 10-year bonds, we see a rally on the 10-year bonds as well. So 4.3, the upward action is also continuing here. So currently, I wouldn't consider taking the new shorts, any shorts positions actually on the gold market. On the daily chart, you can see that a reversal session that initially was looking really nice, giving some kind of the bearish engulfing pattern, now is mostly totally erased. On the lower time frame, on the 4 time frame chart, this is the potential target in the pattern that we have discussed, and we suggest that market is forming the butterfly, and actually 2770 area is the next target here on the gold market. So recent performance, as you can see, yesterday market has opened with a gap down, but very fast has closed this gap and keep going higher. So this is also a bullish sign. Besides, in general, if you remember, we already talked about this, but to just remind you that this was the failure hand and shoulders pattern. And usually when the hand and shoulders fails, it indicates that really the sentiment on the market is changing. So the bearish pressure was not enough. And usually once it has started to fail, it's usually failing right up to the end. So it's, I haven't seen or just don't remember when, for example, hand and shoulders starts failing, but then suddenly starts working back and it's worked properly. I'm actually can't recall any any case of this on this kind. So that's why I think that its chances that market will keep going higher currently more significant than some sudden reversal or something. On the hourly chart, we just mentioned that it might be 222 as the last chance for the bears, where theoretically could try and reverse the situation, show the pullback. But you can see that 2750 of this ABCD pattern already completed, but no bearish reaction started. Besides, market even has formed here the bullish grabber, suggesting that some upward continuation and challenging of this top could happen really soon. Besides, knowing the nature of the gold market, because it's really a cunning market, when the market stands near the top, it almost never leaves us without just attention. So it's usually tending to grab the stops above the top, washing it out. So that's probably what we will see this time as well. That's actually all that we have on gold market. Everything is going well with the plan that we have suggested. Still, if you would like to try to take the short position, although personally I wouldn't do this in the current situation, but maybe you have your own view. I just tell that this is the most suitable point for that. mostly because your invalidation point will be just above the zero, and you can see market stands very close to it. So if even you'll get the loss, it will be minimal. At the same time, retracement with this 222 theoretically could happen. So minor pullback here is not doesn't seem impossible. Although Grabber suggests that it should be straightforward upward action above this area. So as a result, those already who already have long positions could keep them. Butterfly develops really nice. If you would like to take the position on the long side, this is the point also that you could consider, because we have the Grabber potential continuation pattern. Also, it has retested this. You can see some kind of the support areas. Previously was definitely the resistance. Now market has retested with the Grabber, and this is potential chance to consider taking new long position if you would like to. For the short position, as I said, this is also comfortable area, but it's just my personal opinion. I'm not pretending to be the truth of the light resort, but I think that actually bulls have more chances to succeed rather than bears in the current situation.